And welcome back everybody into another study session. So today, as we did in the previous videos, we're going to have a look at the setup analysis and try to have a further understanding of what is an ideal trade setup based on all the setups that I saw and that I showed you in the previous videos. So for example, now I really want to understand, have a deeper understanding of counter trend in trend based on lower time frame, on high time frame, because I need to have this understanding for the next week, for the upcoming week to trade, because I need a bias, I need a plan, I need some rules to trade. So for example, in the analysis that I did, there are not many trades that I did the analysis, but we're going to also have a look at the pictures, and it's I just researched for counter trend. As you can see, we already only had like 11 results, while if I look for in trend, then you will see that we have like 42 results in trend. So I'm going to have a look and try to highlight when it is like high trend, in trend on the lower time frame compared to the maybe counter trend on the lower time frame, but in trend on the high time frame. So for example, the previous one was in trend based on hourly rejection. So this is more like in trend on the high time frame, but counter trend on the lower time frame, because the market structure is counter trend. Then again, this is the same, basically in trend but counter trend. Let's see here. Again, I think these three were all at the same time. In trend based on high time frame, counter trend on the high time frame. This was in trend, counter trend based on the high time frame. So this is in trend on the lower time frame. This is counter trend. Down here, it was in a consolidation. So far we had a lot of counter trend on the lower time frame trades. No trend. This was in trend and it's green. In trend, counter trend, in trend on the recent price action. So a little bit more. Let's see on this further page. So this was in trend on the high time frame, so it was yeah, exactly the pullback. So end of pullback would be better. This, I don't know if this one was in trend or not. This one was in trend on lower time frame. Single candle confirmation. This is a rejection of the 50%. I think this is I don't know if it's a continuation, but this is in trend on the high time frame. So we've seen that a lot of times. It's quite, I would say that it's almost a 50-50. In trend, and the last ones in trend lower time frame and high time frame, in trend, sketch lower time frame, in trend lower time frame, in trend lower time frame. So the last ones were mainly in trend lower time frame. And I would simply pause for a second and count them so that we will have a number of it. So overall we had around 26 lower time frame in trend, and the remainder, which is like 10 were lower time frame counter and high time frame in trend. So that was mainly the when there was a high time frame pullback and end of pullback. But let's have a look about the setups. I just very briefly but trying to understand when was the trade happening. So for example, in this setup, let's have a look. So we see that we have a clear break and retest of each and every previous lows and previous highs, sorry. So we are clearly every bullish entry over here it's a break and retest of the previous ones, previous PSA. So mainly in trend lower time frame and in trend high time frame. What we can see here is that we have a strong bearish push and we are having the end of pullback, which is probably around anywhere from 50 to 61 or 70%. We don't know where this bullish price action was coming from. If this was a strong 15-minute time frame, we could have taken some buys at this bounce. So we see a bounce over here, breaking and retesting, and then with possible continuation up. That's like a 50 pips range. Depends on the validity of this trade idea, but since we are bearish, okay, high time frame we are bearish, lower time frame here we are bullish. So we don't want to take sells yet, because look at the size and the number of bullish candles, the blue ones. When we reach this level, which is probably and very likely a strong level, we have a strong confirmation, and that early entry in anticipation would have been 1862 and down to 1859, which would be a reasonable 30 pip TP, especially considering that we are reacting exactly at these previous highs. Of course, now if this is a strong key level, we can still be in a bullish lower time frame trade, because look at this, look at the price action. Yes, unless we clearly break below this level, we can still be in a bullish bias. So that's also very interesting to notice that on the other side, if you have a system, you can have profit from every single bias, because here you are taking this break and retest of these previous lows, of these previous highs. It's just that the price action, look how bad it is. We probably knew we had some very good momentum. Look at the size of the candles compared to the size of the candle over here with a lot of wicks and much more indecision. Look at this time right before and right after New York Stock Exchange opening. It was very, very messy. But we can have a look at how the break and retest is clear. It's clear. We have this candle breaking up. Any entry at this previous highs, it's fine. Even entry over here at this candle after the first break and retest, or at this one, you have a nice 15 pips stop loss from 1858. You can see your stop loss will be like at 1857. You can still be in the trade even with a deeper pullback. Of course, the best entry and the optimal entry would be this candle close. For the best risk to reward, it's not about price action, it's about anticipation. It's like placing a stop loss over there, but just prevent sell limit, just preventing a buy limit, sorry, preventing that, okay, this candle closes like here, you will not enter. That's only the difference between the buy limit and a manual entry, but this candle is reacting at this previous highs. That's where you see volume coming in after New York Stock Exchange opening. The same, you have a candle breaking up. Yes, that's not a nice closure. Maybe this is a 50% retracement of the bearish move, so you might be hesitant to enter buys over here. But if this is your trade idea because of the validity of 1857 PSA, that's still price making nonetheless. Higher highs and higher lows, higher highs and higher lows. Here it's the same. It's still making a same higher low. It's the same as the previous one, but it's failing to break. It's just that the volume is dying. It's not a lot. And I mean, if you take this one and you get stopped out at break even, you would like to have a breakout to see a clear new higher high to enter other further buys or further retest of this level to take the same entry. But on the bearish side, because we're talking about also the high time frame bearish side, we have this multiple confirmation, this one, flat candles crashing at the same level as before. Further ones, every time you enter, that will be a profitable. You can see the price then makes a new lower low and then goes back to the same level. So that's also probably why this area on the left hand side is a strong demand area, due to the fact, because you see this reaction. Look at the size of the candle, the bearish candles, and how they are immediately rejected. When they reach this level, there's a huge candle, already bullish candle, and a bounce going bullish. So it is clearly a strong candle, but yes, it can be a failure to make a new low, but we can still identify that we have a bearish trend line and a retest of these previous lows. So you have also now your price sensitivity area. Maybe you would like to have this one for better entries because this was more consistent, and you have all your possible entries at the end of pullback. You can see that if you are going in a very aggressive manner, that's when break and retest, single candle, break and retest can be good. Single candle, but this is also end of the pullback. When for the high time frame overall, a hand of pullback is better. Avoiding all this bullish one, just okay. This is the last bearish move that went from here, from 1862.3 down to 1856. So that's like a 70 pip range. You want to see like 35 40 pips of move. That's like, as you can see, 1816.5. That's like a 60%, 75% retracement, and that's where you could have your retracement tool placed for further entries, and that's where you will take your sell. Furthermore, I don't want to delete this because it's very good. And yes, let's move on into another setup. For example, 76. As you can see, price is in a consolidation. We don't know the overall high time frame, but we know that we have these highs and these lows. We can still identify this is also this is London open, so it is during the morning. It's not really relevant, but it's just about, okay, this was my strong PSA, and of course we're also talking about 2021. So these are old setups, but just to have a refresh about it. So these entries is quite aggressive, I would say. Just identifying that price between this order block, especially if we have a look at this minor order block between it, that's where we are identifying new lower highs being created, and I would love to enter at the break below this level. So this one is quite aggressive, but this entry, and you can see that the break and retest is very, very clean. That's absolutely a very good trade idea. And when you see that the price is actually making new lower low, because it is breaking below, that's also when you can also place this line, and that's where you can have your further break and retest. That's the next area will be below here. You don't have a clean break and retest because you see that the volume is increasing, but when you have this breakout, this bullish candle, it's closing just a little bit below here, and a very aggressive entry would give you 40 pips from here. This is a very too aggressive. I don't like it, but every further PSA was broken. It's just about not being scared about, okay, is the price going in my direction again? The volume is not good. Look at the size of the candle. Yes, just an anticipation. As Mark Douglas says, you don't need to know what is going to happen next in order to make money. And that's absolutely a really nice lesson, because you don't need to know that this time the price will go to 40 pips. You just know that, okay, based on my backtest, I know that if it breaks below, there's a highest chance that it will go at least 15 pips for my break even. Might go to 30 pips. to my TP. If it goes back up, yeah, then it's fine. I might have a look at what is the retracement and take another entry over there if it is needed. Let's move on to the next one. Also, you can see how this entry, this price sensitivity area tapped exactly this previous one. So we can have likelihood that the price will continue down. Yes, but the momentum is, the bearish momentum is rolling down. You can see how many, also the size and the number of the bullish candle compared to the bearish ones. You can see that the momentum is not the same as it was during this time. So that's also another good understanding to be careful about it. So let's move on. So as you can see, this is now on during the New York session. So what we saw was that, okay, this is a key level. We saw a breakout and then a retest. This is a trade setup that I have been looking at in the last time. Especially, I'm going to draw you the basic. So you have a level and you have, for example, bullish candles breaking above. Then you see some strong rejection. You don't really want to have the confirmation. You don't really want to enter sells immediately because there's a high chance that the price will continue after this bullish, will continue at this area and then retest and then continuation. So you want to wait maybe to enter sells to validate the sell trade idea. You want to wait for candles to close like this, possibly, and then an anticipation of the continuation bearish. So this is exactly what happened here. You have the breakout on the bullish side, but it's just a fake out. And when you validate that it's a fake out, when you see the rejection, and then you have the retest and then the continuation down. So here you have your entries in anticipation. So let me just do it like this. And that's your high risk, high reward entry. Then your lower risk is still, if you are still on the bearish side, if this is your trade idea, you have the retest of this previous PSA. This is the last higher low on this bullish trend, and this is the retest of it. And then you can also see that's exactly where this bullish momentum it's crashing, because you see the size of the candles is slowing down. Any entry over there, the best entry will be in anticipation, of course, to give you the best risk to reward. You will not be ever in the down, and yeah, it will go down. Then you have the retest of this same last. This is the retest of the last lower low, because now we are in a bearish trend, and that's when you have the retest, and you have now confirmation. You have now the confirmation that we are in a bearish trend with the last high, new lower low, new lower high, and then a new lower low being created. Also, you have the clean retest of this previous market structure lows, and that's where you can have further entries below the other key level 1812.5 for further 40 pips, I will say, because now the range is quite big. Yeah, it will go down to 1807 before coming back up, retesting exactly this previous area. As you can see, the entry at this bullish candle in anticipation would be absolutely optimal. It's now, of course, late after New York close, but London close, but it's still price is trending, volume is there. There's no reason why to stop. Now we are still. This is coming from late London into New York. So this one, I think, is the one that we were seeing before that. Let's see if this price action, yeah, it's the same. So as I told you, the price action was not good, and that's also why you can see here that the size and the number of bullish candles was increasing, and that's exactly where I saw why I was thinking about it, and why I was saying that price could go back to retrace to retest every one of the relevant PSA. After looking at this bearish retracement, you could see a 50%, 60% or 75% retracement at each and these strong PSAs. So let's see what actually happened. You can see that, okay, so we had the retest of probably like a 60 or 50%. This is what I call a sort of vacuum. It's a quite unusual big candle and is coming exactly at the PSA, and that's why you have to enter very aggressively at the candle close, because it's a vacuum. It's not an indication of strength in this side. It's an indication of less orders, of bearish orders, because of they have sell limit at each level, so they don't want to sell already over there. So there's an imbalance in the order flow. So we have a jump in price, but that doesn't mean that is a strength for buyers. So an entry over there will give you a quick scalp in 1843 down to 1839.5. is still a 30 plus pip stop loss TP, and yeah, that's a very good trade idea, because also we were talking about it about this change in momentum, change in strength from buyers and sellers. We saw a shift in this. So in this case, we are high time frame bearish, and so we are taking counter trend on the lower time frame, but in trend on the high time frame. So, and that's the same from this candle. Yeah, now we are. You can see and you can profit for a bullish. If you are on a bullish bias, because you can take entries at the retest of these previous PSAs. So you have the retest of the support, then you have the retest of these previous highs, this previous PSA. Maybe you enter over there, and with a 15 pips stop loss, you will still be good to go over there. Drawdown, not very good, but if you enter over there, you have your stop loss that is below this previous PSA. If it is like a 15 pips stop loss, it will be fine, and you will still be profitable up to 1843, 1842.2 or something, because you enter at 1840. So at least maybe you are break even, because you're still going counter trend. So the decrease in volume and direction, it can be expected. So, but still, if you are on a bearish downtrend bias, which is what the market is telling you, it's pretty clear, I would say. You have these previous highs, you have this confirmation, now you have this candle closing exactly over there. That's where if you are on a bearish bias, that's another entry. Same, price is making a new lower low. The retracement, this is probably like a 75% retracement of this overall bearish move. Probably not with the wick, but the candles closing they look really like they are 75% of this overall. Now we are just zooming into this area. We are forgetting about it because, of course, it's 11:30. Now it's New York open, so it's quite different. Now it's sort of a new day, new price action, new market, because it's a very different volume time, very different time, absolutely. Very, very different also investors and participant players in the market. So you have here a double top at probably what it is, as I said, 75% retracement, and that's where you could have your trade entries. At each and every candle close, you'll still be okay because the price will not break up, and you are still in a clear downtrend, and price is now making a new lower low. So this is the setup, and let's move on to the next one. So again, now this one is of course it was backtesting, where you can clearly see that we are in a downtrend, and we can clearly see that each PSA was retested, maybe not exactly on the dot, but you can see now we're getting to late New York. Each PPL is getting retested multiple times, and that's where a market structure is built. So let's have a look at the price. Okay, we see immediately, even from here, that we have more bearish candles that are currently engulfing the bullish one. Before breaking below this low, we could see that there were a few bullish candles that were closing above, engulfing the previous bearish ones. But every time it was just a single candle when like 4 or 5 minutes, and the next minutes corrected the whole move. So of course now, if you're here, that's quite a sketchy market structure. You don't really have a trend. We don't know what happened before that. It's about waiting for this clear breakout for, okay, now I will take a possible break and retest. I don't know if this was this red area. What was it about? If it was a strong demand area, I don't know what it was. Of course, it was 2021. Yeah, okay, let's just say, looking at the market, we are probably in a high time frame bullish trend due to this trend line that I can see. But we have a breakout and we see a break and retest. Look at this candle, how it is perfectly, and it goes to 25 pips. Otherwise we'll go to break even, but that's another entry at the same PSA that will go into a win, 30 pips win. Then you don't see a clean breakout. You don't really have a clear entry. Probably yours might take, and that's absolutely reasonable. This is a 50%. You see this candle rejecting and you say, okay, that's 50% of the move. I will take entry in continuation. I see weakness, and the only thing that I can tell you is to manage your risk when you see this price action failing to break below. Maybe place your stop loss above there because you don't want the price to go there. Instead of 15 pips, maybe you take a 10 pips stop loss, and it's still a very good. You're taking you are saving up on some pips, but still now you're still in a bearish trend because price never showed you a change in market structure. It was a little bit weak, but it's not like this price action created this market structure. So there's no reason to shift into a bullish bias. We are still on a bearish one. And that's why same PPL as before, that's a perfect entry. And that's also probably like a 75% retracement of this bearish move, which you can validate. Yeah, that's probably 75% retracement with your entries on the bearish side. And that's the beauty of sticking to a single bias until you are proven wrong, which is very, very important, very, very difficult to do sometimes, because on the 1 minute, the sticking to a single bias can be very, very difficult. Then you take your trade, you take your win, you see the break below. Now, I don't like this price action, but we are staying below the PPL. Of course, we are getting late. We are now after London close, but we have this nice candle confirmation. So if you're still trading, either you enter anywhere over there, but still you have this candle confirmation showing you some increase in volume engulfing this previous PSA. That could be an aggressive entry, but it's getting late, and you can see the volume is really dying down. So it's like 25 pips, but look at the price action. So you don't really want to stay too much into this trade. So if you didn't get your TP over there, let's just take your 15 pips and get out. Yes, you see another rejection, but what does it tell you? What is the market telling you? That the volume is completely dying down. I don't know if it's even, maybe it was I don't even know about the day. Maybe it was before some big news that was coming in the next days. Maybe it was coming at FMC. I don't know what day it was. But anyway, again, it looks like that the end of 2021 was a lot of bearish bias, because you can see that every New York session we were in a bearish bias, breaking below. Very nice. This is about the retest. So if we are in overall bearish bias, because maybe that's what we can see from this trend line, I don't know. If we are already in a bearish bias and we see lower highs and lower lows being printed, high risk, high reward entry. When you see the break, the retest, and the failure to break above here, it's very hard to enter in real life, in real time, I would say, from my personal experience so far. But yeah, when you see the breakout, and of course we're now into pre-New York, so there was not much of an entry, you see this, that's the same thing that I told you. You break above a key level, that's a fake out, break below, a retest, and then continuation down. That's the same, simply done on a smaller scale, and it's not making a new higher high, and then continuation down. It's quite different, but that's the same concept. Or you could take a single candle, you see the volume coming, and you see that you have a clean break and retest below this level, but yeah. Let's then talk about New York, because if you trade New York like I do, these are all, you can't catch these entries. So you have two options. One is you see that the price, this is New York open, price made this push and then retrace. This is not a 50% retracement, so I will find it really hard to enter over there. But if you stick to it and you don't really try to catch like I will do over here or anywhere, that price is giving you the opportunity, because this is a 61, probably, yeah, 61 or 50, yeah, 61% retracement to this previous PSA that already gave some price action before that, and that's the continuation bearish into making a new lower low. So you can see here we can cover this one. Let me just delete this. We add a bullish bounce. This bullish bounce is not, yes, it's coming from a key level, but I mean, that's it can be expected. You could take probably a very high risk, high reward buy over there. That's if that's your plan, if you want to take counter trend trades, but that's playing with the main trend, it's always better. Even if sometimes it's hard on the 1 minute, as I was saying, but look at this trade entry. That's so clean. Let me just do that so that it doesn't cover the whole entry. And yeah, entry in anticipation, entry will be exactly when the candle closes over there, and then you will just have a clean win and even bigger risk to reward compared to that. Furthermore, you will take for the continuation, as you can see, that's why an entry over there, it's too late. So probably, hopefully on the 60 ticks chart, you add a candle closing over there. Most of the times you have a bullish candle closing at the PSA and the very next one doing like this. And that's on the 1 minute, it will give you this candle setup. But it's giving you the opportunity to enter at this candle close at the BPL. Otherwise, I would highly suggest you to wait to enter. Maybe you have also, maybe it is creating something like this. You have a bearish candle, and then it creates two bearish ones, and you could have two entries, one very high risk reward, one with a confirmation. It just depends on time, because sometimes the price opens over there, and in like half a second it's already at the very next candle. Anywhere the entry over there would have given you a nice stop loss from here. This is your entry, the stop loss will be here, and your TP over there, so it will be a win. That's why entering in anticipation is so important. So this entry is at the previous lows, it's a key level, so we broke below and retested the key level, and that's where you could have had your further entries. So let me just redo this one, so the setup, so that I can save it. So this will be the key level. So that's the sort of zooming in. That's the key level, and you most likely have a bullish candle and a bearish one, or let me just do it, divide it like this, or maybe you have bullish candle, a small one, and then a continuation bearish And this, as I said, this is on 60 ticks chart. And that's still very good to know, because that's where sometimes it gives you, most of the time it gives you better trade opportunities. You can see that any time the price retested this key level, it will be giving you nice 30 to 40 pips scalps. But yeah, this supply area is showing you some strength, and you have to be aware of it. You can't just then take this trade, because you're seeing that from a very strong bearish one, we are now coming into a consolidation lower time frame. So until now, because these entries are okay, because price made a new lower low. Price broke below this level and made a new lower low. So we are still in a bearish trend. The only thing is that, did I delete something? I don't know. Okay, is that if you want to enter over here, you have to be aware of this double bottom. So that's not a good trade idea, because as I said, you are now in a consolidation period. So what is the next PSA where you have to be aware of? Do you want to change your bias? Can be, because now what you see is that maybe you have some fundamental catalyst. Maybe you see, okay, sellers exhausted. So let me see what it happens. Just based on this price action, what you see is this. You have the key level, these previous lows. So you have price giving you possible confirmation and possible confirmation for bullish bias. If you want to stick to a bearish bias because you don't want to take any sell trade, what you see is that this was the last PSA of interest, and you see that here it's not about just getting random trades, but you see that, okay, you have nice candle after the new 4-hour open. You see price is still making highs, new higher highs, but look at these candles. What is this formation? What is this candle formation? How many wicks are they leaving on the top? Conveniently at this previous PSA on the left hand side. It's not like doing it around here randomly. It's doing it exactly at this previous PSA. So that's why you have, if you are still in a bearish bias, that's where you have possible entries. Again, on the 60 ticks chart, you will probably see candles closing over there. That will be perfect entry for a quick scalp. Then this entry, for example, would be the hardest, I would say. Why? Because now what we are seeing is that price made a double bottom, created a new intra higher high. Yes, it failed to break above, but still look at this size and number of bullish candles, made a new higher low. It's very hard to enter sells over there, I would say. It's much easier to enter a buy over here at around 1789 point something and have it like 1792. That will be probably your TP, 30 pips TP would still be good, but it's very hard to keep in mind that you are in a bearish higher time frame bias if you are seeing the lower time frame, the last price action, the market is telling me buy. So it's very hard to enter sells over there. Probably even if you took the previous entries, in this case, you will not be trading again. So it's not really a problem to miss this trade. It's fine, unless if you took the trades. Otherwise, you will probably just be going left and right looking for another trade. Then again, further, let's see, it's been like 40 minutes, okay. Further trade setup, as you can see, sell, this is a very counter trend sells in a very bullish, look at the size of the candles. Yes, here, in this, you should not trade. I should not trade. Yes, we failed to make a new high, but unless I'm identifying this PSA to be anywhere relevant, for example, this PSA that we are seeing the break and retest happening, because we are seeing bullish bias. So far, we're just seeing a pullback, could be a pullback, But when I see that is retesting and failing to make a new high above these previous highs, that's where we can take the expectation of entering sells. But it's unless this is validated to be a strong PSA, then that's quite useless. And you could take, this is your bias from the last low to the new high. This is just a deeper pullback. Probably look at the side of this. Look at this where it is happening. It's probably like a 75%, 61% retracement of this overall move. And as you can see here, and we are switching bias when we are getting a reaction already from there. So that's what this entry, it's stupid. That's because you're getting a reaction at a wrong level. You're overlooking a reaction at a strong level. So that's either you take your buys over there, 1-1, and that will be a win, I would say. I don't know if this is, I don't think that will be a 30 pip range, but either a break even or whatever. And then you validate your sell because of this. Look at this price action. You have this high, this new lower high, this new lower high, and you can now validate all these lower low being printed. So this will be high risk high reward entry. Safer entry would absolutely be here. Now, there's no reason now to doubt a bearish trend is coming, because look at the price action. We broke below. We broke below this PSA, and even though you can't really see, that's where you have all the best entries. You have the wick retesting these previous highs, you have the candle closing at the PSA, and yeah, closing with strong rejection. And this is also this is London time. This is pre-London, and this is London. This was London open. London open, as you can see, vacuum of orders. This is probably London open. Vacuum of orders. Failure to break. This is just a vacuum. It's not strength from bias. It's just a vacuum, and then a continuation bearish, and you could take your trade in continuation over there, break and retest, or whatever. So I hope you guys enjoyed, and tomorrow starts a new week. So yeah, that was pretty much it. So remember to really focus on what the market is telling you right now. Is it telling me, are we in a bearish bias, are we in a bullish bias, where the price is reacting to, where is it, blah blah blah, and stick to that, because it's very, very important. I hope you guys enjoyed, and I'll see you tomorrow or whenever.